Welcome back to our channel, where we delve into the fascinating world of stock market investing. Today, we will be discussing some of the latest trends and technical analysis for Tesla Incorporated. One analyst has noted a potential stall in the stock's performance, and we'll dive into the details to understand what this could mean for investors. Remember, this analysis does not guarantee any specific outcomes, rather, it aims to explore the possibilities. Before we begin, make sure to hit that subscribe button and ring the notification bell to stay up to date with our latest content. Let's get started. According to one analyst's observation, Tesla could be facing a stall in its price action, possibly extending into July 21st. However, it's crucial to understand that a stall doesn't necessarily indicate a crash or a significant trend reversal at the primary degree of trend. It's essential to keep this in mind while assessing the stock's future prospects. As we delve deeper, let's explore the concept of major reversals. Although they are always a possibility, especially after shorts have been decimated, they often wait for clearing out of hedging and short positions. Identifying the time and price components of such a major reversal can be exceedingly difficult. Attempting to predict the exact top of a stock is indeed challenging, as insider trading suspicions would inevitably arise if their trades lined up perfectly with major news catalysts. Calling the precise top of a stock is often a misplaced endeavor, but prudent analysis can be helpful. Let's shift our focus to the short to intermediate term outlook for Tesla. One prudent approach is to analyze the charts and consider the potential vulnerability of the current trend's continuation. Major resistance levels on higher time frames can play a crucial role in causing a mean reversion or retracement of the recent rally. Looking at Tesla's chart since January 6, 2023, we can see that its intermediate term trend remains consistently upward. Additionally, short-term, 2 to 6 weeks, and intraday trends also show an upward trajectory. However, when we zoom out and analyze Tesla's performance over a 2 to 3 year period, the primary trend appears to be relatively sideways. This means that while there have been fluctuations and movements, the overall direction has remained relatively flat during this period. Zooming out even further, let's consider the secular trend of Tesla since 2010. Surprisingly, the chart analysis shows a firmly upward trajectory. This long-term perspective reveals a sustained growth pattern for the company over the past decade. Now that we've examined the various trends, it's essential to interpret what they mean for investors. The consistent upward movement in the intermediate and short-term trends indicates positive momentum for Tesla in the recent past. However, the relatively sideways primary trend could suggest a period of consolidation or stability for the stock. Despite the current primary trend, the enduring upward secular trend since 2010 highlights Tesla's long-term potential. This sustained growth over the years is a positive sign for investors with a long-term perspective. And now we will be analyzing downside targets for Tesla in the near-term future. It's essential to highlight that the downside targets we're about to discuss are purely speculative. The stock market is inherently unpredictable, and no analysis can guarantee precise price movements. These downside targets should be viewed as potential scenarios rather than definite outcomes. Our first downside target falls into the conservative category, with an estimated range of $245 to $250 for Tesla's stock price. This target suggests a potential pullback or retracement within the coming weeks. However, keep in mind that this is merely a speculative estimate and not an absolute prediction. Moving on to the moderate downside target, we're looking at an estimated range of $232 to $238 for Tesla. This level indicates a more significant potential pullback or retracement in the stock price. It's crucial to approach this target with caution and consider other market factors that may influence Tesla's performance. Finally, we have the aggressive downside target, which suggests a potential decline in Tesla's stock price within the range of $199 to $218. This target implies a more substantial movement and might be of particular interest to investors with a higher risk tolerance. As we analyze these downside targets, it's vital to remember that short-term market movements can be affected by various factors, including market sentiment, economic data, and company-specific news. Always conduct thorough research and seek professional advice before making any investment decisions. Risk management plays a crucial role in investing. No matter the upside or downside potential, it's essential to diversify your investment portfolio and never invest more than you can afford to lose. Yesterday, Tesla reached an intraday high of $299.29 before reversing its course ahead of the earnings report. The price fell back below the crucial 0.618 retracement level at $295.05. Indicating resistance in that zone. This peak coincided with a confluence of resistance levels, including major horizontal resistance, parallel uptrend channel resistance, Fibonacci levels, measured move zones, and downtrend line resistance levels. The measured move zone's upper bound was at 299.72, which closely aligned with the 0.618 retracement level from the entire decline between the all-time high and the low in early January 2023 at 295.05. Notably, these levels also coincided with trend lines on both linear and log charts. Additionally, positioning data showed high call open interest in the $295-305 area, indicating a cluster of call holders potentially taking profits before the market close yesterday. This action led dealers to unwind long Tesla hedges, which contributed to the stock's weakness even before the earnings report release. As Tesla experienced this significant pullback, initial short-term trend support can be found in the 263 to 265 range. The stock briefly broke below this level intraday. Two critical levels to watch are 263.08, a Fibonacci level, and 265.10, a key swing low that was slightly undercut today. Although these support levels may prompt a brief bounce to retrace some of the initial decline, it's important to remember that price action doesn't always adhere to these levels rigidly. It's crucial to note that the recent earnings report and investor sentiment may also be playing a role in Tesla's recent performance. Earnings reports often lead to increased volatility and market reactions as investors reassess their positions based on new information. To wrap it up, Tesla's bullish run has temporarily stalled, with the stock experiencing a notable pullback from its intraday peak. Technical factors, including the confluence of resistance levels and high call open interest, played a role in this decline. As we move forward, keep a close eye on the initial short-term trend support at 263 to 265. But always remember, market dynamics can change rapidly, and flexibility is key to successful investing. There are technical analysts and trend traders who primarily focus on trends and technical evidence to make their trading decisions. When the market experiences retracements or corrective moves, trend traders tend to favor trend continuation rather than a reversal, until the evidence suggests otherwise. This means they believe that the current trend is more likely to continue rather than change direction. Let's apply this concept to Tesla. Currently, Tesla's intermediate and minor trends are upward, which indicates that the stock is on an upward trajectory. However, the primary trend, considering data from the last 2 to 3 years, might be considered sideways, showing relatively little overall change. Nonetheless, the long-term secular trend since 2010 remains upward, indicating a sustained growth pattern over the years. Now, the big question is, should trend traders consider factors outside of the technical evidence? This question doesn't have a clear-cut answer. Some traders might explore non-technical evidence, such as news, company fundamentals, or economic data, to gain additional insights and confirm their trading decisions. Balancing technical and non-technical evidence is crucial. While technical analysis provides valuable insights into market trends, considering external factors can offer a more comprehensive view. However, it's essential to remember that adding non-technical factors to the mix can be complex and requires a deep understanding of various market dynamics. Therefore, it's essential to take things step by step. Focus on understanding technical analysis first, as it forms the foundation of trend trading. As you gain experience and confidence, you can gradually explore incorporating non-technical evidence into your analysis. As always, conduct thorough research, stay informed, and stay mindful of risks when making investment decisions. Thanks for joining us today on this analysis of Tesla's recent pullback. If you found this video helpful, don't forget to give it a thumbs up and share it with your fellow investors. Subscribe to our channel for more market updates and analyses.